Hello everyone, it's Monday, February 13th. Welcome to a very important week for the markets. So we will wait just another minute or so. Just let me know if everything is fine. Either you're watching this on YouTube or maybe on TradingView. Please let me know if everything is fine. How was your weekend? Where are you from? We finally have some warm weather after very cold. It was last week. Now it's 10 degrees, 15 degrees, so should be pretty good week, I believe. I'm just missing summer so much. Okay, let me check something. All sounds good here. Okay, perfect. Just let me switch off some. Yeah. Transmission good on YouTube. Okay, so it looks like that some favors YouTube, some favors TradingView. I think that both are very good for watching, but I think it can be some lag on YouTube. Maybe it's some kind of a delay. Anyway, so welcome to our new webinar, live session, the Elliottwave session, starting a new trading week. So you know it's a pretty important week. We have the US CPI data tomorrow on February 14th, Valentine's Day. So you have to decide whether you will stay with your wife, girlfriend, whatever, or will you be watching the charts. I'm sure that if you're a trader, you will be watching the charts, either on mobile or laptop somewhere will be nearby. So at least that's me each time. So anyway, we will probably see a lot of volatility tomorrow because, as you know, after very strong, we can, after very strong jobs reported for January, it will be hard for Fed to bring down the inflation, obviously, because if there are plenty of jobs, it means that there is more money to be spent, and this can impact the inflation, obviously. Um, so the markets are pricing in more potential rate hikes. That's why we have seen a very strong move to the upside on the US yields, on the US dollar index as well. So we will see how this data will impact the price action itself. We really cannot ignore the fact that the US dollar index has stepped into this corrective movement. If you look black and white, if you look here on this price action, we clearly are here in the first stage of this corrective recovery. So I think that we could be actually seeing some choppy price action here. When we get this data, maybe this wave B will be even more complex. But the idea is that we are in a corrective rally, and that I think that there is room for more upside. Even if we see that US dollar would sell off after the US CPI, let's say that inflation will come down below 6% or so, and the US dollar would come to the downside, we still would have to keep in mind that maybe wave B could end as a potential flat correction. So in my opinion, yes, we are tracking just a temporary corrective pose, but the ideal resistance for the next sell-off is still, in my opinion, from higher prices. Now, whatever US dollar will do tomorrow, stocks will most likely do the opposite. right? Because if the US dollar will see move higher, if maybe the inflation will come stronger than expected, let's say 6.5% or so, then US yields will rally, and as you know, markets will put their bets that there will be more hikes going forward, and technology sectors, cryptos, everything will sold off. Okay, so but of course this could be just a temporary reaction. We will see what will data be, but the important is also, I didn't realize this earlier. Let me check. Where is the link? I will put the link on YouTube and on TradingView as well. They changed the calculation for the US CPI data, starting with the first report uh, tomorrow. Okay, so it starts because tomorrow is the data for January. It means that for 2023, the calculations has changed. Actually, it could be quite important. What I understand is previously they were, I put the links into the chat boxes. So previously they were actually taking the 2-year window for comparison to the current data, but now they will take only one year. So for example, now they will compare data to 2021, but with the previous calculations, they would actually be doing like comparing data to 2000 to 2-year window, meaning 2020 and 2021. Okay, so this will definitely make some changes to potential to potential outcome. Some maybe even believe that because of that calculations, the US CPI will actually be lower. So this could be bullish for the US dollar. Now, as I said, I think that we are in a corrective stage here for US dollar. Looking here at Dow Jones, that's actually the FXCM dollar index. It's equally weighted compared to euro, pound, Japanese yen, and Aussie, I think, if I'm not wrong. So here what we have is a very nice clear 5 waves up from the lows, and now you are in a corrective movement. Of course, this wave B can be more complex, as I said, or could be already finished. Now here we have this dollar map for this correction that I'm tracking. So why I'm bringing on this correction, why it's shown here, because I realize that not all of you are familiar with the all substructures rules and the Elliottwave patterns. So that's why I'm looking, and that's why I'm looking also at this basic chart for a zigzag. So actually, in Elliottwave terminology, even if market is in a corrective move, you should see minimum 3 wave movement. Okay, so even if we say that market is just in a will sooner or later find the resistance, you still need this ABC fashion to the upside before this correction can be finished. And so far, looking at these substructures of this potential zigzag that can be unfolding, we're still in a wave B, right? Or maybe wave B, as I said, could be finished. So in either case, I think that there is room for potential more upside into this wave C. So I will patiently waiting on this wave C. Maybe it's already underway to see how will unfold, to see how far dollar can rally. But I think that any rally here in the next few weeks will sooner or later hit resistance, and we will come back to the downside. Because looking at here some bigger charts, I think it's a pretty clear here that this is an impulsive sell-off. I mean, trying to count this as a WXY or something, yes, it's possible, but in my opinion, not probable. Okay, because you can clearly see that it's a very strong drop here. Okay, so I think that that's an impulse, while the corrections are much slower. So maybe we are now in this stage here. Also, we reach this support level here, so we are now rallying away from it. So maybe this channel resistance lines, base channel, could potentially cap the upside here. Also, last time I didn't bring on this chart, but it's good to give you a reminder where I think could be headed. Well, here is the comparison of this channel to the previous one from 92 towards 2000 highs. You can see very similar price action, very similar drop, but I will not say that we are going back to the lows. I always try to look at the market so that I will expect the minimum, look for minimum expectations, and that would be probably the retest of the lower side of the channel, because sometimes you just have to be more focused on basic technical analysis can be easier than just trying to do a combination with other tools and get confused. Okay, so we could be just chopping around from from the upper side to the lower side of the channel. This could continue, but even this stage, I think that since we fell to the mid channel, that we could be headed towards the lower side of the channel, and this makes sense if I consider what I see on the Elliottwave, structure as well. Okay, so in my opinion, US dollar, as I said, is in a corrective rally. It's unfinished, but when this will happen, of course, this US dollar weakness will resume, and other currencies like Euro, Pound, Aussie, in my opinion, will strengthen. Okay. Um, Now, if we also look on the dollar yen, which definitely should be important tomorrow, not only because of the US CPI, but you have also, I think, Bank of Japan will nominate new governor. So we will see how this will impact the price action. Now, from an intraday perspective, clearly there were some speculations about dovish hawkish governor. So actually that has defined the price action last week. That's why you have seen a sell-off on Friday and then a recovery. But the new governor nominated could be, I'm not sure if I will read this correctly, Kazuo Ueda. So he's a little bit more dovish, possibly because he said on Friday, what I read, that current policy settings are appropriate. However, this could definitely should change if we will see the inflation in Japan keep moving higher. Now, from an Elliottwave perspective, I also think that this one has made a very nice bearish impulsive drop, and that you are now in a corrective stage. What I really like about the current price action is that from that recent low, we aren't really recovering much, but if you look closely here, we can already see overlaps. Okay, so these overlaps can be the first, but probably the most important indication that we are in a correction. Okay, now, of course, after strong drop and extended move here to the downside, now this correction could actually be still headed even higher towards the previous wave for maybe even for 30 and 50% retracements, which is still what 500 pips away. Right. So keep in mind that even if we are tracking correction, this still can have some more room to go before we eventually hit resistance. Now, looking here at this chart, I'm potentially observing this head and shoulders pattern, not really the perfect one, but what I want to do here is compare this pullback, which was the widest pullback, widest slack within the previous recovery. So if we somehow try to respect the personality of this market, this pair, then maybe we will see another similar correction because we are taking it of the same degree. So here we also have a potential resistance around 136. It comes in. So then you have above that you have this 139. So this whole area here definitely should be very important. Even 135 is the first one. Okay. So so I'm looking for potential limited upside here, okay, in the next few weeks, few months, maybe even already tomorrow. I'm not sure what will be the outcome. I don't want to put my bets on it. Now, there's a question. Are you going to trade on macro stuff, on news, on fundamentals, or will you focus more on levels, on the price levels? I realize that even if the US CPI will come, let's say 6.5%, 7% tomorrow, US dollar will move strongly to the upside, but then will be again new speculations, new events in upcoming weeks and months that could still cap the upside on this pair. Okay, so I will still stick with this wave count no matter what the outcome is tomorrow. Okay, so I'm looking this for a wave B rally, and as I said, sooner or later I will be looking for 2023 for more weakness here. Also, looking at, since I'm talking about CAD yen, dollar yen, let me take a look on CAD yen, because we know if dollar yen will move to the downside if something will either happen from Japan, from the US. Dollar yen will typically make a very strong impact on yen crosses. Now, so I'm trying to look always at the closest correlated pair, and this should be CAD yen. Now, CAD in general has been very weak, and this could resume again because Bank of Canada noted that they will actually stop the hikes. So that's why somehow CAD has been recently bearish, but we are seeing a very nice recovery so far, moving into this 99-100 area. Potential resistance here. We also have the 38.2%. You have this wave 4 that equals to wave 2 also added at the area. So I think it's a pretty attractive zone for potential new sell-off. I also have here this intraday chart that I updated recently. Now, firstly, I thought that maybe wave 4 is finished here. But then when we updated this one, of course, we were watching this lower trend line support was not giving broken, was not giving way. In fact, that's the timing when dollar yen moved to the upside after this nomination reports by the media. So for Bank of Japan. So what we are seeing now, well, if that was not the top here, right, for this wave 4, then the only thing that we can do here is label this as a wave X, and it means it becomes a complex wave 4. So I'm still observing potential more upside here. So 100 level clearly is a very, very attractive level in my opinion. Also, reactions like this here, not really sure what was here back on December 19th. If anyone remembers, knows, let me know. Maybe it was yield curve control, adjustment, or it was something else. But normally when you see such a strong reaction from one particular point, if and when market is reversing, well, you can see our retracement all the way back to this important level. Okay, because clearly there was plenty of important orders that triggered that followed later and caused even further sell-off. So a lot of those orders and entries could be potentially now fully retraced. So that's definitely the important resistance that we should watch for if we are going to see this retest, of course. Also, it comes in here at the wave 4 of 2 lesser degrees, so also very, very important level. Okay, so that's for CAD yen. Now let me take a look what I have here on my list. I have cable. Okay, so pound also very important, should be volatile this week. We have also inflation figures coming from the UK on Wednesday, right? And on Wednesday, well, Bank of England probably hopes that sooner or later they will see inflation coming maybe below 10%. That's still not the case. So somehow it's very hard for from Bank of England to be dovish if inflation is not coming lower. However, they expressed on their last meetings that they will somehow they turn dovish, and that's why we have seen a sell-off on pound. But if, again, we are going to see maybe inflation coming back to the upside in UK or not coming down as they think, then of course pound again could see a very strong move higher. Now looking here at this daily chart, well, I still think that major bottom here has been formed, and we are now in a corrective phase after market failed to break above these bullish levels, which are marked as a potential resistance here. So we are now stuck in a wave 4. Can be a triangle, can be a wave, can be a flat. So I have here 2 wave counts actually to give you more details here. So the first wave count I'm observing is a potential triangle, meaning that each leg in a triangle should somehow be corrective. So far, that's still a drop from a new high in 3 waves. Okay, but for a triangle, I really want to see an overlap with this price here with 12265. That would be very bullish for me, looking more into the future, because then we would have this drop clearly confirmed that it was a correction, but most likely part of a correction, complex one, as I said, as a triangle. Because as long as we are trading below that level, I realize that this could easily be an extended leg, like a wave 3, because typically wave 3 is the leg that should be more extended compared to others. Okay, so I also have another wave count here showing a potential flat correction. Okay, so this one is also valid, but more importantly, it has a support then probably somewhere around or below beyond this wave A level at 1840. So from a longer term perspective, I think that we are in a corrective phase. It's the only question what kind of a form this pair um, will make. So we will see if there will be flat or will there be a triangle. But in either case, it's a bullish formation. It's a pose with a hard degree uptrend. So if you're a more short-term trader, of course, you will wait on this correction firstly to unfold. Okay, someone asked me how to trade structures like this. Well, if there are very big ranges, if you're a more intraday trader, you before you want to put your trades on, probably you want to see a completed correction, right? So you want to see these 5 waves down completed, and then what you will wait probably is on a 5-wave rise. Okay, something like this. And when this happens, then you can look for potential longs on a pullback. Okay, because then if you wait on this confirmation after the pair comes down, then you will have good level to know where you are wrong. Okay, at these lows then, because that's the level, if you see 5 waves up, that should not be crossed on the next pullback. Okay, now if you're tracking if you want to be also involved still in this upcoming bull run, but after a triangle, then of course you should wait a little bit further here to unfold these waves and waves D and E, and then maybe buy a breakout when you see wave D to be crossed. Okay, so that's still not, obviously it's not happening. That's why I'm saying that it's a little bit too early to look for potential opportunities here on regarding the short-term structures or potential setups. But the longer term, in my opinion, as I said, is pretty clear. We have a very nice response from the lower side of very big wedge here. So I think that more upside here will follow. Also, just a reminder of this some kind of an ETF that tracks pound. You can also see that we had plenty of very important volume here at the lows. Normally that occurs at the end of the trend. It happened back in September, so I think that that was a very important low, and that we will see more upside after the current dip. Okay, now let's take a look on AUSD. Now, if you like our live webinars, please give me like, subscribe, leave us a commentary, whatever. If you have any questions, also please let me know. Now let's take a look on on AUSD. Now here on AUSD, as you know, last time when we covered this one, I was looking for more weakness. I said that we are only in a wave B rally. I also like the fact that despite this hawkish RBA, they said that they will look for more hikes in the future meetings. Well, notice that AUSD didn't really progress much to the upside. Okay, so that's very interesting. Okay, because it tells you that traders are more focused what the Fed will do, right? So again, tomorrow the US CPI will be more important. I think that from an Elliottwave perspective, we are still in a corrective phase here. We could reach lower prices now. Very nice, important level from a longer term perspective for a new bounce would be 6,600 to 67. That's the area. Now, when it comes to wave B, maybe someone wants to play on the short side because of this broken wedge here. Well, again, keep in mind that maybe it's not the right one. That maybe wave B still could be a little bit more complex. Notice that I have labeled here an alternate wave B, meaning that it can still retest the resistance. And the idea is because notice that this was a move out of a downward channel, and this drop was only in 3 waves. So maybe wave B will be complex, like of some kind of a flat if I adjust the wave count, or maybe even a triangle if we stay sideways here. But in either case, I just think that sooner or later these lows here from start of February will be retested. Okay, as long the market obviously is holding this 71.58 level. Now let's take a look also on New Zealand dollar. Now sometimes when you look at one commodity pair, it's not a bad idea to check the others as well, to maybe to make an analysis there and see if they somehow the price action agrees. And what I see here after this dollar strength, okay, and when the Kiwi has reached this top failure breakout, what we are seeing right now is after this very strong drop is again market is sideways. So when it comes to personalities of the wave, of the subwaves, well, clearly you know that that's probably in the first page of the impulse and corrective waves, that impulse are fast, corrections are slow. And I mean, my 10-year-old son will know this, that this was a very fast move and that this is a very slow move. So if that's a slow move, then it's a correction, because also you cannot count this as an impulse, at least not at this stage. So I think that there is a probability that market will resume even lower, potentially even retest this February, that was from January, start of the year levels, and then we see a bounce. So from a longer term perspective, yes, I'm bullish on Kiwi, but I'm just aware of potential lower prices here. I've been tracking this zone for a while, and I still think that it could be seen. Also, there will be, if we break this or come close to this wave L supports levels, then you know that again, pessimism would probably come back for the Kiwi, or I should say maybe that optimism for the US dollar will increase. But normally that's when we should be aware of a new change in cycle, right? So because the markets, as you know, work in from pessimism to optimism and vice versa. So that's why I still think that this could be a very attractive level here for potential longer term rally, recovery bounce. Also, the previous move here to the upside was clearly impulsive. And if you look closely here, I'm using this, you can see that maybe this one could be something similar to this one. Here you had a flat for a wave B, so maybe we'll see here also a flat for a wave B, maybe not a running one, maybe expanded one. But the idea is that this was correction, and I'm expecting something similar. Should be also interesting to see how long this one has been unfolding. That's the 4 hour. Let me look at the daily. This one 65 days. If we try to compare this one, we got the 65 days approximately on March 10th. So it would be very, actually perfect timing, I would say, for wave C to come back to these levels, and then we see a turn to the upside. Okay. Let me check what I have next here. Let me look at crude. Now, as you know, crude oil has seen very nice recovery last week, at the end of the week, after Russia actually cut the production for 500,000 barrels per day. So obviously one of the reasons is because they want to sell something for a higher price after these energy cap prices that the European put on. So definitely that's the reason for a recovery here. But let's not get confused by this intraday noise. I mean, I'm looking here at the new contract. Actually, it's April contract. The March will expire next week, Monday. So I'm still looking at this to be ongoing consolidation. So it can be wave A. Notice a very nice free subwaves up, wave B down, wave C up, also made by three waves. And now could be already in wave E here. Okay, so that's a very important resistance here around $80, 81 here, looking at this contract. But the idea is that this rise here from that low was in three waves. So in my opinion, I just have to be aware that there could be a retest of the lower levels. Okay, especially as long as we are below 88, I think that this is a neutral trend on crude, and that there's still a chance for market to reach lower prices, because clearly the trend for the last few months is to the downside. So if you look at this structure, what's the most likely to happen next? To see stronger recovery back towards the all-time highs, or I should say 2022 highs, because all-time highs were not met here. Or is there a better chance that the market will go even lower? Well, if you have a free subwaves from that latest low, then clearly you should be aware of lower prices here. So I think that we are in a corrective phase, but still, after adjusting the wave count this weekend, I still think that could be potentially wave A with approaching support here around 62. I have here this one is the energy sector. You can actually see that this one is not that bearish, right? Could be potentially forming here an ending diagonal, a wedge pattern maybe. Not the perfect one, I know. Could even retest the highs, but that's when we are going to see this corrective stage here on the crude oil. So when this market, in my opinion, this sector will retest the highs, that's when crude oil will make a lower height and potential then sell off later this year, maybe already. Now let's take a look also on gold and silver. Okay, so gold, big picture, nothing has obviously changed, but so far we are seeing a very aggressive reversal to the downside, but I think it's a corrective phase here. Okay, I think that we are forming this ABC pullback. I'm not really sure if that's wave 4 of a blue degree, or maybe we are already on a higher degree, black wave 4, which would make probably more sense based on these Elliottwave guidelines, I should say. But very important support still could be around 1840. Then you have 1800. Okay, so the whole zone still, I think it's a very attractive potential support for a next bounce. I'm also aware that maybe wave B still here could be a little bit more complex, especially if we are not going to see any extensions much lower here within wave C. Now there are some rules or guidelines. Okay, how far can the price go if we are in a flat formation? So let's say that this is going to be a flat formation. Then I do not want to see the price going beyond this 138.2%. Okay, if that happens, then I think that wave C is already in place, especially if maybe we are going to see the daily close price, stable prices below that level. Okay, so but as long as we are here holding these potential fibs, there's still chance for potential more complex wave B here. But in either case, I think that it's a counter-trend movement, but has more to go. Okay. Also, let me take a look here on silver. Now, silver. What I want to look at silver here. Or I have this one. I will have to do it like that. Okay. Firstly, I want to look at the gold-silver ratio. Okay. Now, gold-silver ratio is usually indication if if metals are in uptrend or in downtrend. Overall, normally they are in uptrend if you see this gold-silver ratio moving to the downside. What has recently happened is that actually gold-silver ratio moved higher, and I've been tracking this one and been warning that potential resistance could be seen on gold, because silver was not moving to the upside when gold was trading sharply higher earlier this year. Okay, so it was not a real bull run, and clearly that was evident for this through this gold-silver ratio chart. But what we are seeing right now is a potential very nice resistance here at this line. Okay, and this resistance line potentially could cause more sell-off. So with this being said, I think that maybe silver could do much better, or that both of them, gold and silver, could could find some buyers. Now, looking at this chart of silver, notice the very important 2150 figure around there. Okay, you've been retesting these levels here, 2020 in September. Then it came very close to that level again in November of that year. Then September 2021. Then again December of that year. Then we broke through that level, chopping around. Before that, even have seen some reactions lower when we were trading lower. But now, after this break higher, we are again trying to retest this same level. So if that was a very important support, and when we broke through, well, maybe this should be now very important attractive level for a new rally. Okay, it's some kind of a pivot level here for gold silver bulls, especially when you look at the bigger picture. So I think that silver could rally from here, but I'm not really sure if that would be impulsively or correctively. Okay, I know that I was firstly tracking a potential flat correction, but then I adjusted the wave count because of the US dollar and also because of the price action itself. Now, normally when you see a flat correction, you want to see wave C to be very quickly reversed by the next few days by a very strong price action. It should be sometimes even stronger than this wave C, but that drop, in fact, was a very strong one, and price keeps trading at that levels. Also, we haven't seen just a spike here below these previous supports that would lead to a new bullish reversal. Something like the opposite occurred here at the top, but we are rather still trading quite heavily here below that levels. Okay, so that's why I'm looking this to be still wave A, maybe for bigger corrective movement. But as I said, that level around 2150 is a very important level when look at other stuff, and maybe we'll get a recovery, but maybe that will be only wave B. Okay, because even if the prices are turning bearish, there will be pullbacks, there will be rallies, and maybe that's the week that we should look for potential bounce here. So it really depends what kind of a bounce will unfold here. If that would be in 5 waves, then of course we would look for more upside. If in 3 waves, then we will look for this as a resistance that could potentially even stop around 23. Okay, I hope this makes sense, that I was clear enough on this one. But longer term picture, I think it's pretty clear here. I will be looking for more upside, especially as long as we are trading above 2022 support. Also here, the very attractive levels should be around 20, I believe, if we go more, if we see more weakness, because that's also psychological round figure, of course. Okay, now let's take a look also on some indexes, S&P 500. Now, as I said in our past live sessions, what we have to observe is VIX, known as a fear index. There was no fear. It means that market may not so easily recover, especially when you have this, everyone waits on this US CPI. So again, this will be the important trigger for the next move, not only on US dollar stocks as well, obviously. And so far, we are still holding this resistance while the VIX is trying to find the base at the lower side. So watch out for potential flat corrections, still can be the case. Okay, of course, I realize that even wave B, wave 2 could be finished here. Okay, I know that pretty well, but what I want to see is that market confirms that this is really the case, and that would be a daily or maybe even better weekly close above that high here that goes back from August. Okay, why I'm looking from that high? Well, if you look at the previous downtrend, okay, that were very important swing highs, right? And here was a new swing low. And if the market has changed to bullish mode, well, just try to forget on Elliottwave for a second, just from a basic technical perspective. If something is trading to the downside, right, what you want to see is that previous swing highs are broken to make sure that the trend has changed, right? And that would clearly be the case here at this level if we can pass this wave B swing high. So I'm definitely patient here, and I want to see this one to be broken before I can confirm that we are headed straight to the upside. Also, here I have this one, it's Dow, and notice that here we also have potential ongoing correction. Could be, of course, a triangle here, could be even a deeper ABC. So far, I will stick with this ABC because it fits better into the whole current concept regarding the US dollar and everything. But if we suddenly break, let's say, if we see a close here above that trend line, then I think that, of course, triangle could be finished and then we will see more upside. But again, from a Elliottwave perspective, trying to stick with the basics, I think that this is a very, very potential attractive support for a new bounce. Of course, if we get this level, definitely I'm not interested to short into this level. I would just buy at better price if we would see this kind of a retracement, right? Okay. Now let's take a look also on DAX. And one of the reasons why we should be careful here with US stocks, obviously, is also DAX. As I said, the DAX last time can actually count 5 waves to the upside. Even I can count 5 subwaves within a fifth wave. So when you have this in place, you just have to be aware that optimism is probably increasing. It's moving to the extremes, and again, be aware of corrections. Of course, maybe that will not be the case from here, but just you have to be careful and probably not going to buy for a new leg higher from here. Probably you want to see some healthy corrections, maybe just a smaller one like this fourth wave, but definitely buying here, in my opinion, it's a little bit risky and a little bit high, especially ahead of important events here. Looking at the 4-hour chart, as I said, we have sub waves, 5 waves up. We also have this broken trend line. So I think that even if we are in lower degree correction, not the higher one, still this could be retested here. These levels from a previous triangle. Also have this divergence, meaning that bulls are tired as well. So again, very not a good place, in my opinion, from an Elliottwave perspective at least, to look for any longs here. Okay, now let's take a look also on some of the cryptocurrencies. So actually, I will just focus on the Ethereum. Now, cryptos has seen a pretty nice retracement. Okay. And before I go to Ethereum, I want to look this at total market cap. I think that this could be a very nice correction. Now, either we are here already trying to build a base here for a wave 4 around 38.2%, and you will see a rally back to new high, or maybe that's still the first leg of this wave 4, like it's shown here. Okay, but in either case, I think that there will be a rally coming. Now the question again will be temporary, will be a new push to new 2023 highs. I don't know, but what I know is that in either case, this structure is bullish because we clearly have seen a very nice extended leg to the upside previously. We have seen this resistance to hold to limit the upside here at this November and September highs, and now we are just making a pullback, in my opinion. So 38.2%, that are very attractive for potential new bounce higher. So as long as we are trading here above this wave 1, maybe that wave 1 could be a flat correction, but as long as we are trading above that 80 billion 820, I think that that's still an uptrend, that we are now only in a corrective phase. Okay. Now, with that in mind, potential rally for a wave B or maybe even for a wave 5, I want to look at the Ethereum. We covered this one as well, I believe, last time. And we've been actually looking at the futures here. That price can retrace. We said that it can retrace back to this gap from mid of January. Also, notice that there was a spike in volume. There was a spike in volume here around 1500. Okay, so that was achieved, meaning that could be very attractive support now here for this wave 4. Again, maybe wave 4 will be more complex, maybe it's already coming to an end, but I think from a technical perspective, it's a very attractive level. Of course, we should stay above 1350, of course, for this market to remain, for this structure to remain valid. Okay, because wave 4 clearly must not trade into the territory of a wave 1, obviously. Okay, traders, that's it for today from me. So I hope that you like this analysis. Please give it a thumb, give us a like, leave a commentary, whatever, and make sure to join us again next session, next Monday. Hope we will be here. And be careful going into the Tuesday, because this market could very easily be just sideways, very quiet for the next 24 hours, but then we should see some interesting price action. Okay, traders, enjoy your day and talk to you soon. Bye.